Hey guys, welcome back to the channel. Today we're going to talk about Disney, and we're going to evaluate this company and try to see where this company is going. Is it a good time to buy or sell, and what's the future hold for Disney at the moment? We're going to discuss all the different type of business entities they have, such as Hulu, Disney Plus, theme parks, sales, and all the metrics to this company, you guys. So please take the time to subscribe and like this channel. Also, I'd like to hear your comments down below in regards to this analysis. Okay, so here at the top, you can see 25 top amusement theme parks worldwide. Okay, so this is the attendance for the theme parks worldwide. So here we go, year 2017, up 0.3% at 20 million people visiting the park in year 2017. And here you can see that Magic Kingdom World Disney at number 1. At number 2 we have Disneyland Anaheim.ca US at up 2.0%, 18 million visitors for the years in attendance. Okay, so here are the top top 13 theme parks, top 25, but I was only able to gather the top 13 because the top 13 was all that I needed to see. Okay, so here we have a picture of what the theme parks look like. They got these castles and all these nice things that attract people, and the roller coasters, and they have, of course, the cruise line as well, which I didn't provide a slide for, but we know about the cruise line and what's going on with the cruise lines if you've been watching the news lately. Here is another creation of Disney, and so they have a very a very nice how can you say, overall overview of the company. If we look here in the media network that Disney owns, we have they own ABC television network, they own ABC owned television stations, Disney channels worldwide, ABC Family, Disney Media Distribution. Okay, and they also own 11 theme parks worldwide and 43 resorts. Okay, so these resorts and theme parks bring Disney about $2.2 billion on a yearly basis. Okay, guys. So as we wait for the slide to change, I can see already what Disney is beginning to do. They're investing in their theme parks, they're bringing in people, they're attracting people to these theme parks, and also have a really good consumer product sales in going up this year. So they sell apparels, toys, home decor, books, magazines, foods, beverages, stationery, whatever that is, electronics, fine art, Disney Stone retail chain, of course. And they also have what is called Disney Studios, and these Disney Studios brings about 4.5 billion on a year-to-year basis. Okay, guys, so Disney is a very well how can I say, Disney is a very well diversified company. They just don't rely on the theme parks. Okay, here you can see what kind of networks Disney owns. Here's a list. They own Telemundo, Fox, Sky, just recently acquired Hulu, and they also own ESPN, you guys, which is the biggest sports network in the world. Okay, bringing in a total of 7.3 billion yearly profits revenue, you guys. So very interesting what Disney has done. They have really balanced out their portfolio and do not only rely on one set of income, and that makes Disney a very strong powerhouse in the entertainment and network sector. Okay, so as we move forward, We have Disney Plus, Hulu, and ESPN package that Disney just created for $12.99. Okay, guys. And recently, Disney has reached 50 million subscribers in comparison to Netflix 180 million, which is really good because Disney just doubled their subscribers in 1 year, okay, or less than 1 year. So that's just really good news for the stock and stockholders. Here we have a picture of Walt Disney Studios. Of course, everybody knows what Walt Disney Studios is. They own all the cartoons and just the top of the list, you guys. And this is also something that I find very interesting because they're already, it just shows the strength of the company. It shows the history of the company, and it shows where this company can actually go moving forward. Okay, so as we wait for this light to change, please guys take the time to subscribe to the channel and comment down below. Here's a quick picture of everything that Disney owns, you guys, and I'm gonna put the link down below so you can go ahead and analyze this picture yourself on your own time, because I know you probably can't see it very well here on the screen. Waiting for the next light to come through. Here, you guys, is a chart of the revenue that Disney brings in yearly. Okay, so here we can see 7.3 quarterly, I'm sorry, for the parks in the year 2020. For our first quarter, you can see a parks and experiences 7.3 billion. The media network broadcasting with the ESPN and the ABC channel, those bring in about $7.3 billion yearly. So also they have direct to customers and just sales is 2.0 billion. Okay, and then they have studio entertainment, which brings in about 3.7 quarterly, okay, billion. And then of course we have the new package deal that they came up with Hulu, Disney Plus, and ESPN Plus, which is also beginning to gain lots of traction. And here's just a quick view of the revenue from 2008 to 2018 in billions of US dollars. Okay, so you can see here from 2009 a just steady growth up to 20.29 billion US dollars for the company's resort segment. Okay, guys, so as we wait for the next slide to come through, I find it very interesting. These companies that continue to show growth in revenue are the ones who continue to persist through the stocks. Current stock price sitting at 109.25 cents on this date. Book value of 49.75, PB ratio of 2.08, return on investment of 6.75, dividend price of 0.84, and a dividend yield of 1.6, guys, which makes the stock pretty attractive if you ask me. The only thing that I don't like about this is that the PB ratio is at 2.08, but with a company like Disney, this is kind of expected and acceptable because of the history of the company and what the assets and all they own and what they mean to the world. Okay, guys, so company does have a very good moat around the company, and that makes the company stand out really strong. Okay, guys, total assets at 193.9 billion, liabilities at 100 billion, shareholders equity at 93 billion, and cash on hands of 5.4 billion, a long-term debt of 38.1 billion, a net margin of 6.88, and a total number of employees of 22,000 employees, current price ratio of 0.95, and a debt to equity ratio of 0.45, which is pretty good. Okay, so here what stands out to me is the long-term debt. they did acquire a lot of debt recently, and be interesting to find out what the debt was for. Uh, I think I'm pretty sure it was what they um, use the money to uh, create Disney Plus. Okay, guys, and the acquisition of Hulu was also part of that debt acquisition. Okay, guys, so Disney annual cash on hand, we have 5.4 billion for the year 2019, and as you can see, the history shows a progressive growth in that area. Disney annual long-term debt is 38 billion, as we discussed earlier, and then you see 17 billion, 19 billion, 16 billion, and this has been adding up in the recent years, but it's very well expected. Disney annual total assets at 193. Interesting how they were able to double their assets from 2018 to 2019. That is something that is we should look into. Disney annual total liabilities sitting at 100 billion, and very interested here what happened here on this slide. The assets just doubled in 1 year, and I think it's because of the the recent acquisitions from Disney, which was Disney Plus and Hulu. Okay, guys. So as we move forward to the next slide, Disney annual revenue 2019 was 69 billion. Okay, and you can see a $10 billion increase in revenue from the year before, which was 2018. Okay, 2017 was 55 billion, and for the history overall, you can see the annual revenue continue to grow very steadily. Disney's annual net income is 11 billion. 2018 was 12 billion. 2017 was 8 billion, and also continued to increase. Okay, guys, here we can see the return on investment, and this is something that we really need to focus on, because this is basically what you are going to be earning in the future as you continue to hold this stock year by year. Okay, so return on investment is 6.31%, and then we have 7.37, and then we have 8.92%, 11.31%, 14.97%, and it goes down to 20.88%. Okay, so here we can see that in 2018 the stock had began to slow down. Okay, but yet I'm still very confident that the company will continue to grow. Okay, here broadcasting revenues for the quarter increased 34% to 2.6 billion, and operation income increased 41% to 575 million. The increase in operation income was due to the consolidation of TFCF, largely reflecting program sales and timing benefit from new accounting guidance, partially offset by lower results at our legacy operations. Okay, so also in parks experiences and products, revenues for the quarter increased 8% to 7.4 billion, and segment operation income increased 9% to 2.3 billion. You guys, so the company continues to show growth in that sector, increase of 34% for the network sector, and an increase of 9% in the theme park sector. You guys, so once again, guys, hit the subscribe button, like. I am not a financial advisor, and my overall grade for this company is a B+. I will buy Disney if the stock drops under $90. That's when I think I can jump in and grab a few of these stocks. But honestly, it's not a good time. It's not a bad time to buy right now as well. These companies don't tend to drop too much during any type of crisis, just because of the